Okay. Follow along, make sure you have a different color, and make sure you're honest, okay? So the Coopers have a bunch of assets and liabilities listed. Jaren, just grab a seat for now, okay? Let's just listen. Determine the net worth. So net worth, if you know the formula, is assets minus liabilities, basically. So you have to identify what's what. Okay, so condominium is asset. The mortgage with a balance, that's a liability. A mortgage is a loan towards real estate. A bank account, that's an asset. Student loan, you owe it, that's liability. A car is an asset. Pension plan is also an asset. Line of credit, anything that has a credit card or line of credit is not a good thing, you owe. That's a liability. Credit cards is also liability. Okay, so you want to add up all the assets. So net worth, I'm going to add up all my assets. So it's 245 plus 25 plus the 10,000 plus the 50,000. Okay, and then you go minus all of your liabilities. So you've got the 220, you've got the 45,000, you've got the 16,500, and you've got the 12,000 credit card balance. So that's what I would want to see. I would strongly recommend you do that. And then add them up separately, though. Don't just get all of this. Don't put everything in your calculator, because chances are you're going to need some of these numbers again. If you add up all of your assets, you've got 412,000. If you add up all of the liabilities, it's 289 of 500. And so here's your net worth is 122,500. Okay. So we're going to make this worth 2 marks. I'm going to give you half a mark for all your assets, half a mark for all of your liabilities, and a full mark for subtracting. How does that work? If you make any mistake in your assets, take off half a mark right away. If you have made any mistakes in the liabilities, take off half a mark right away. But if you subtract those two numbers you have, you still get to earn the 1 out of 2 in that case. Okay, so if you have this number, you get the 2 out of 2 for this question. Next is the debt equity ratio. You don't need to state the formulas, but debt equity ratio is liabilities minus the mortgage divided by net worth. That is, in short, what the formula calls for. So yes, your liabilities you identified as 289,500 minus the mortgage. My mortgage was 220,000. So yes, you subtract it, even though it's part of your liabilities. Now you subtract it out of it again. So basically, you just want to know, how much do I owe other than the mortgage, other than like the real estate, divided by your net worth. It's probably a good idea to do that first, and then we multiply that by 100. So you end up with 69,500 divided by 122,500 times 100. You get 56.73%. Again, I will make this worth 2 as well. If I see you transferring your liabilities here, you get half a mark for that. If I see you taking away the mortgage from whatever your liability was, you get half a mark for that. And then you get a full mark for doing the next part correctly, which is dividing by your net worth. So these numbers could all be different. If I can see that you've used numbers in A and they're in the right place, you technically get 2 out of 2. As long as I could plug in what you got and get the same answer as you got. You put everything in exactly the way I have, same numbers? Yeah, so half a mark off usually is my answer. If I can see it, if I can find the mistake, half a mark off. Yeah. $330 here? This? Oh. Uh-oh. Yeah, I'm looking at the wrong. Sorry, guys. I'm looking at the wrong version. Like these are slightly different numbers. It's Tuesday, right? It's basically a Monday. Okay, let me just scrap this. I'm just gonna show you the key. My bad. I'm terribly sorry for that. Let's do it again. So I go all my assets minus all of my liabilities. It's 330, right? That's what you were saying? Yeah. So half a mark for that, half a mark for your liabilities, right? And then your net worth should be 36,500. Is that good? Is that what most of us got?
So if we don't show it separately, we don't
No, you still get 2 out of 2 if you get the right answer and you show us some work. The province will say if it says determine or calculate, you have to show work. Some sort. Like it doesn't have to be exactly like mine, but you have to show us work. That's 2 marks, okay? Now let's go to this part.
A custodian to room 49 with cleaning supplies for the toilets. A custodian to room 49.
Then you take your liability, you subtract your mortgage, divide it by your net worth. I will make this worth 2 as well, just so you know. So half a mark for that, half a mark for this number, and then a full mark for calculating. So still worth 2 marks and 2 marks. Okay, so A and B, they're both 2 and 2, so 4. You didn't do the 2 decimal places, that's half a mark off. And then here, based on the debt-equity ratio, describe the financial standing. You would say their DSR is far above 50%, which indicates that their liabilities are too high. Okay? So you'd have to say that's not good, because you want to be below, right? Remember the magic numbers? GDSR, you want to be under 32. DER, you want to be under 50. And what's TDSR again? 40, right? Yeah. I'm testing you guys. Anyways. Yeah, I was looking at a slightly different version of this AC, sorry. And it backfired on me. Okay, so this is worth a mark. The C is just worth 1 mark. It needs to have the 50% reference there if you want the mark. If you don't have the 50, you don't get the mark. That's coming from the province. That's not me making this up. So this page is worth 5 marks. Okay, this page is worth 5 because it's 221. Backside. I'm going to show you the formula method. I know some of you isolated, but if you remember the formulas I gave you, it says max mortgage is max you can spend on housing minus heating minus property tax. That's basically how the maximum you can spend on your mortgage. So what's max housing is 32%, because that's the maximum GDSR, on your income. I got to do a little bit of work on the side here. If I divide this by 12, I get $6,250 per month. Everything has to be in monthly amounts. So I'll find 32% of $6,250. This is the maximum I should be spending on housing, right? Housing being mortgage, heating, property taxes. Those three things are considered housing. Minus, I pay $300 on property taxes and $100 on heating. I know I flipped the order, my bad, but as long as you subtract those two numbers, you're fine. That gives you, let me just do this here real quick on the side. That's 2,000 minus 400 essentially. So the maximum you can spend is $1,600. It doesn't matter how you found out, whether you use the big GDSR formula and you substitute it in and you isolate it, that's also fine. That's part of showing your work. But this is the formula I gave you if you watch the lesson. Okay, so $1,600 is the maximum monthly payment that this person or this household can afford. GDSR is a real thing. It's happening. Like, I just had to I'm thinking of redoing my mortgage. They do that. Like, the banks actually calculate your GDSR. Okay. B. They find a house when the mortgage payment is calculated based on a 3% interest rate, amortized over 20 years. It turns out that the payment is a little bit too high for their GDSR, meaning like when they calculate the monthly payment, it'll be more than $1,600. That's a problem. Okay. Answer in words. Give two ways the Hansons could adjust in order to get their GDSR into an acceptable range. Can I just do this? I will just use the GDSR formula. Your mortgage, your heat, your tax, divided by income. Okay? That's the GDSR. I will just tell you, I will highlight the ones you have a say in, that you can actually impact. You can impact your mortgage payment, and you can impact your income, but you cannot touch the heating and the taxes. Yeah, I know, I'm answering it just because I need you to know. This isn't, I'm not going to mark this, you're not going to lose marks on this. But how can we decrease our mortgage payment? Decrease by, how can someone bring down the mortgage payment? Pay less every month on your mortgage. What can someone do? Pay more compounding periods. You want less when you're owing money. But pay more what? What do you do at the very beginning when you take out a mortgage? You're supposed to have a down payment. Okay? Jaden, just wait for now. Increase your down payment. If you put more down, your payments are going to be lower, right? So that's what you can do. Increase the down payment. How else can someone lower their payments? This is a 20-year mortgage, right? A 20-year. Let me look up here. Can you go 25? Can you like extend the time you have to pay? Yes, that will also bring down how much you pay every month. So you can increase the term of the mortgage. I would like you to write this down. I know I didn't ask you to answer it, but now I'm doing it, right? I will just keep it at those. Income, how can you, increasing your income is kind of tough on the spot. You can't just be like, oh, trust me, like I'll work overtime. Like they'll have to see a track record of you making more. So you can increase your income getting a second job or whatnot, but they would want to see like 6 months or a year worth of extra income. Term is just the amount of time. So compounding period not necessarily in there. Yeah. Okay. You can get a cosigner. Yeah, so this page is worth 2 marks. So I'm gonna take you back up here. I will give you 1 mark for figuring out the maximum housing and 1 mark for figuring out the maximum mortgage, which means you have to subtract the heating and the property taxes. So 1 mark for maximum housing. If I see 2,000, you get a mark already. And then another mark for subtracting those extra costs. Yes? Did you get 1,600? Then that's fine. Yeah, absolutely. I don't really care